In a stark and somber warning, Robert Kiyosaki, renowned for his financial acumen and authorship of Rich Dad, Poor Dad, sounds the alarm. Prepare for something worse than any recession. Drawing upon his extensive experience, Kiyosaki paints a sobering picture of an impending economic crisis of unprecedented magnitude. His message is clear. It's time to take proactive measures, make prudent investments, and fortify our financial foundations. With uncertainty on the horizon, Kiyosaki's urgent caution serves as a wake-up call, urging us to equip ourselves with knowledge and foresight to weather the approaching storm. What's coming is worse than any recession. Kiyosaki's alarm bells ring in sync with the heated discussion about where the U.S. economy is headed, all because interest rates are soaring like a rocket. Picture this. When rates shoot up, people might think twice before swiping their credit cards, which could then slam the economy into a rough patch, which they call a hard landing. But here's another angle to this tale. Some central bankers who manage the country's money believe they can pull off a trick to achieve a soft landing. They want to tame inflation, using these high rates without totally wrecking the economy. It's like trying not to spill your drink while riding a roller coaster. Is that even possible? The IMF just dropped a bombshell at the World Economic Forum in Davos. They're saying we're sailing into some of the roughest economic waters since World War II. Remember when COVID-19 hit and it felt like we were living through a real-life World War II movie? Well, the economy took a punch to the gut, just like back then. Supplies vanished, the global supply chain got all tangled up, prices shot up, and it was like musical chairs with jobs. People wanted stuff but couldn't get it, and the economy did a belly flop. The stock market played dead, and we had a good old recession party. Sounds familiar, right? Well, we haven't seen this wild ride since the groovy 70s. History is repeating itself, but with a twist. Whether it's going to be a bumpy ride or a surprising win depends on how you're looking at it. Before we dive deeper, make sure to hit that like button and subscribe to this channel for more incredible life-changing content. Now, let's move on. Looking back at the 1970s, it's pretty clear why people are worried about inflation sticking around for a while. First off, we're seeing deja vu with the whole supply mess caused by the pandemic and the recent energy price shock from the Ukraine situation. It's like a throwback to the oil shocks of 73 and 79 and 80. Back then and now, the monetary policy was pretty chill before these shocks hit. They were letting the economy party a bit too hard. Fast forward to today. Inflation's been acting up for quite a few months in fancy countries, so they might need to hit the brakes pretty darn hard on the money front to get things back to normal. But here's the kicker. Slamming on the brakes too suddenly could lead us to a rough patch, like that rocky ride in the early 80s where there was drama with trade, sky-high interest rates, and inflation going bonkers. That sounds a bit like what's happening now, right? Even in 2018, interest rates were doing the limbo. So yeah, history seems to be dancing in circles. The big question now is whether we'll do the inflation tango or avoid a hard landing. Why is this happening? There are a few pieces to this puzzle. First, imagine interest rates tightening up like a clenched fist. When that happens, people tend to cut back on spending because their paychecks and wages aren't growing. And to top it off, mortgage interest rates have shot up like a rocket. Now, if we don't step in with some smart moves, we could be heading straight into a nasty recession. The IMF head, Kristalina Georgieva, says we're in for one heck of a challenge, maybe the biggest since World War II. The whole mess with Russia barging in hasn't helped either. Lives are getting messed up, growth's taking a nosedive, and prices are shooting through the roof. But Georgieva thinks we might just dodge the bullet and not crash into a massive downturn. Even though financial markets are getting all gloomy, there's been some surprisingly strong economic data. Yet people in the know are getting a bit skeptical. Economists did a survey, and they're all less chipper than they were 6 months ago. They're predicting moderate economic activity in the US, China, and most emerging countries. Europe might get stuck in a weak patch, especially with the Ukraine situation. And inflation's about to party everywhere except Asia. Real wages might take a hit. Food's gonna be pricier, and energy costs are on the rise. The world's economic troubles are piling up like a messy puzzle, and the pieces are getting harder to fit. Supply chains all over the globe are getting all tangled up. And as if that wasn't enough, interest rates are climbing higher, making it tougher for people to spend their hard-earned money. Economists are sounding the alarm bells louder than ever. China's factories are running slower than a snail due to lockdowns. Europe's got a wallet-draining cost of living problem. The US is teetering on the edge of boom-to-bust roller coaster, and emerging markets are struggling with food shortages. Germany's Vice Chancellor and Economy Minister Robert Habeck flat out said he's worried we're zooming towards a worldwide economic slump that could mess with the climate and global stability. Jane Fraser, head honcho at Citi, added her 2 cents, predicting a recession in Europe and a downturn everywhere else. She summed it up as Russia, recession, and rates, causing all sorts of trouble. The IMF admitted things have taken a gloomy turn compared to the sunny forecast of 3.6% growth the IMF gave us for 2022. Russia's invasion is playing out like a scary movie, tightening money stuff. The US dollar's flexing its muscles, and China's slowing down. Georgieva said this year's gonna be a toughie. She's betting that some countries will hit recession mode, but it might not be a global freefall. But how bad could this get? When we talk about recession, we're talking about a lot more than just numbers on a graph. It's a storm brewing on the economic horizon. It could mean the loss of jobs, like Amazon layoffs. People get pink slips, paychecks shrink, and folks are left scrambling. Your hard-earned savings? They might dwindle like a sandcastle at high tide. Net worth takes a nosedive, and your financial cushion might feel more like a deflated balloon. Even this might mean the devaluation of fiat currency. Prices go up, but your cash doesn't stretch as far. It's a bit like a wallet on a diet. Now, things can get even darker. We're talking depression territory. Imagine the gloom of the Great Depression. Jobs vanish, businesses crumble, and the whole economy goes into a nosedive. It's a roller coaster you desperately want to get off. As for the American empire, well, it's a big question mark. History has seen empires rise and fall, like the Roman and Chinese ones. But whether we're facing a similar fate is a hot debate. The next few months could get pretty rough. But what comes after? It's anyone's guess. Could it be a great reset, like hitting the restart button on the economy? Others fear a great downfall, where things could go from bad to worse. It's uncertain and full of twists. Time will tell which way the economic winds blow. Now, the financial world had its eyes peeled, wondering if this recent interest rate hike was the final act before the Fed takes a breather to see how the economy's holding up. Even though the bigwigs mentioned 2 more rate hikes for this year back in June, the market's been betting on the possibility that they might hit the pause button. In a news conference, Chairman Jerome Powell spilled the beans. He noted that inflation's cooled down a bit since last year, but getting to the Fed's 2% target is still a long shot. Interestingly, he left a crack in the door for possibly keeping rates unchanged at the next Fed meeting in September. If you find this video informative, like and subscribe to this channel for more educational content. Let's continue. Powell put it this way: we might just crank up the funds again in September if the numbers tell us to, but hey, we might also decide to keep things steady. In other words, they're playing it by ear, taking it one meeting at a time. But it's high time for the Fed to hit the pause button and let the economy catch its breath after those previous rate hikes. Now that the Fed has bumped up rates by 25 basis points, we believe that the easing inflation pace, slower job creation, and steady growth provide the right atmosphere for the Fed to wrap up its rate hike spree. If this plan clicks, we could see the market on the upswing, household net worth leveling off, spending making a comeback, and companies putting the brakes on layoffs. So now is the time to start creating wealth and investing. It's prime time to kickstart wealth creation and investments. Robert Kiyosaki, foreseeing a turbulent recession, focuses on 3 assets to safeguard against turmoil. Gold. Kiyosaki's top bet, gold, has a strong history of enduring economic turmoil. Over 8 years from 1974 to 2008, when U.S. inflation was high, gold prices surged 14.9% on average each year. In the past year, gold's value increased by around 6.8%, even as inflation ranged from 6% to 4%, proving its resilience. Silver. Another favorite. Silver outperformed gold during the 1970s inflation boom, surging 3,900%, compared to a 188% stock market rise and an 1,800% gold increase. Although silver's performance during recessions is mixed, it's on Kiyosaki's best insurance list for a hard landing. Bitcoin. Kiyosaki's trickiest choice. Bitcoin lacks the lengthy track record of gold and silver. While early adopters reaped significant gains, later investors have seen a 0% total return for over 2.5 years, despite Bitcoin trading near $27,000. Its effectiveness as an inflation hedge is questionable outside of the stock market. In these uncertain times, Kiyosaki advocates diversifying these assets to protect against potential economic upheaval. Robert Kiyosaki's candid warning serves as a thought-provoking reminder of the unpredictable economic landscape we find ourselves in. As we navigate the complexities of today's world, his insights shed light on the potential challenges that lie ahead. Whether you're a seasoned investor or someone taking their first steps into the realm of financial planning, Kiyosaki's advice encourages us to be vigilant, adaptable, and informed. While the future may hold uncertainties, his words empower us to explore strategies that safeguard our financial well-being and pave the way toward a more resilient and secure future. If you enjoyed this video, like and subscribe to this channel for more content. Thanks for watching.